Imagine a world where the United States completely halts trade with Europe and Canada. This would be a seismic event, a rupture in the global economy unlike anything we've seen before. No more German cars on the streets of New York. No more Canadian lumber building American homes. The flow of goods and services across the Atlantic and our northern border, a constant for generations, would cease to exist. This is not a scenario anyone desires, but it's one we must consider. The interconnectedness of the world economy, a phenomenon once celebrated as a guarantor of peace and prosperity, could swiftly transform into a source of immense vulnerability. In this new reality, the United States would face a profound test, its economic resilience pushed to the brink. The immediate impact would be a staggering loss of trade revenue. The United States conducts trillions of dollars worth of trade with Europe and Canada annually. This sudden stop would send shockwaves through the American economy, disrupting businesses and impacting consumers in profound ways. The cost of everyday goods from groceries to electronics would likely increase, placing a strain on American households already grappling with economic uncertainty. The financial fallout from such a trade war would be immense. The U.S. trade deficit with the European Union and Canada combined is about $1.8 trillion annually. This represents a massive loss of economic activity and jobs. Moreover, European firms hold trillions in U.S. investments totaling between $3.2 and $3.5 trillion. This capital would likely be withdrawn, further destabilizing the American economy. The impact on specific sectors would be particularly severe. The auto industry, heavily reliant on European parts and markets, would face production shutdowns and massive layoffs. The technology sector, deeply integrated with European supply chains, would experience similar disruptions. These are just two examples among many, illustrating the widespread economic pain that would ripple through the country. This economic earthquake would not be confined to American shores. Europe, too, would suffer significant consequences. The European Union sends a substantial portion of its exports to the United States. The sudden loss of this vital market would plunge their economies into recession. Unemployment would rise and social unrest could follow. The dream of European unity, already strained by internal divisions, could face its most severe test yet. One of the most devastating consequences of this trade war would be the unraveling of global supply chains. For decades, companies have optimized their operations by sourcing parts and materials from the most efficient producers worldwide. This intricate web of interconnectedness has lowered costs and increased efficiency. However, it has also created a system highly vulnerable to disruptions. Consider the automotive industry. A single car often contains parts sourced from dozens of countries. The absence of European components would bring American car manufacturing to a standstill. The same logic applies to countless other industries. The smooth functioning of the global economy relies on the free flow of goods and services. A trade war of this magnitude would shatter this delicate balance. The energy sector would also experience profound disruptions. Canada is a major supplier of crude oil to the United States. The loss of Canadian imports would send oil prices soaring. American consumers would face higher gas prices, further straining household budgets. The ripple effects would be felt throughout the economy, as businesses grapple with increased transportation costs and consumers cut back on spending. The consequences of this trade war would not be limited to the economy. The stock market, a barometer of investor confidence, would likely crash. The Dow Jones Industrial Average, the S&P 500, and the Nasdaq Composite would all experience significant declines. This would wipe out trillions of dollars in wealth, impacting retirement savings and shaking confidence in the American economy. The job market would also suffer a severe blow. Millions of Americans are employed in industries directly dependent on trade with Europe and Canada. These jobs would be immediately at risk. The ripple effects would be felt throughout the economy, as unemployment rises and consumer spending drops. The overall impact on the U.S. GDP is difficult to quantify but would undoubtedly be severe. Some economists predict a contraction comparable to the Great Depression. The U.S. dollar, the world's reserve currency, would also likely weaken. Investors, fearing instability and uncertainty, would seek safer havens for their capital. This could lead to a flight from the dollar, further eroding its value and fueling inflation. The cost of imported goods would rise, exacerbating the economic pain already felt by American consumers. The American dream, built on a foundation of economic opportunity and upward mobility, would become increasingly elusive for millions.